I'm putting together a series on options trading, and this series I'm calling Options Trading for Beginners, where I'm breaking down strategies that work for options trading. Simply put, a lot of guys or girls, women, get involved in options trading and their expectations might be too high. First and foremost, I'm an economist and I'm also a mathematician in the sense that when I went to university, I studied both economics and statistics. I'm heavy into statistics, and I'm always going to ask the question, what is the average? What is the norm when it comes to how far the stock market moves in any given period? Given that, I can have a realistic expectation of how my option strategy will play out. So if you are trading options, and you've not necessarily hit a lot of your targets, what I've been doing is putting together this series, Options Trading for Beginners, and I'm looking at, today I'm going to look at overnight and 0 DTE stock options on SPY stock. And I'm asking the question, what are valid expectations for the market given any particular market move? I look at data and I ask the question, on average, how much does the SPX move, therefore SPY stock, on average every single day? It's sort of Moneyball for stock options. And if you have an approach like this, you have a good expectation of what's going to happen. Now, I put a video up yesterday. I'm going to continue to put videos up here for stock options for beginners, answering the question, what happens with 0 DTE options with one specific trade where you just walk into the market every single morning and you buy a put and call at the money. Zero concern what direction would the market actually moves, but a broad daily movement and then maybe 25% profit on what you spend for that put and call. Yesterday's trade, you pulled out, it was about, I think it was $1.72 was the actual movement for the day, or for the put and call, and there was a $50 profit for the day on that particular option. So it was 0.5 profit. Given that, what happened today, Tuesday? Let's break this down. Starting tomorrow, I want to do 1 week options and also 1 month and continuously update those for the stock options for beginners series that I'm putting together. Let's jump in and I'll break down yesterday's profit, but we're looking at Tuesday. Let's jump in. We'll see how it went. Here's a look at SPY stock, SPX. SPY stock finished up at 520, I think 65 for the day, Monday. And I looked at two options. First, immediately after the market closed, I asked the question, what are the 1 DTE, meaning tomorrow's options, expiring tomorrow. Now, the thing is, we're walking into this market saying one thing. We have no idea what's going to happen in the market. Now, I get that people embrace technical analysis. For me, it has zero value whatsoever. I sit there and walk into the market saying, no idea what's going to happen in the market. Could go up, could go down. Someone could say something at any time, and because of that, there is any number of possibilities. So let's assume we have absolutely zero clue what's going to happen, but that we know that the SPY stock will move either up or down. On average, I have the statistical data, and I'm going to break that down for you so you can see that on average, the market moves a certain amount. There is the open, then there's the distance between the open and the high, the open and the low. There's also the close. There's a distance between the low and the close and the high and the close. There's also the third thing I look at is what's the range between the high and the low. Every single day, this gets printed, whether it be December 24th, where the ranges are so tiny, they're minuscule, or on days when there's stock market crashes and it could be several percentage points. But I'm looking specifically right now at the past 100 days, which the market has been fairly modest. Moves haven't been that very big. That gives us an idea as to where the heartbeat of the market is, but we just don't know what's going to happen with the stock market moving up or down. So looking at 1 DTE at the close on Monday, going into Tuesday's moves, and then Tuesday morning, waking up saying, no clue. Let's just buy a put and a call. How much does it cost? How much does the market need to move? Can I earn 20% on buying that 0 DTE put and call? I have those numbers. I'm going to continue to do this. Yesterday, of course, pulled out 0.50 off of SPY stock, which amounts to $50. Let's move forward and let's break things down. So reference was 520.65. Reference is what we call, for stock options trading, we call the current price of whatever you're dealing with reference. 521 calls are trading at $1.35. 520 puts 120. Now here's the thing. Going into Tuesday, this is a bit more robust than the price points I saw going into Monday. The reason being is we're getting closer to Wednesday morning when there could be some volatility because we get inflation data, and inflation's been a hot point for the stock market. So Tuesdays or Monday afternoons, 1 DTE, puts and calls, a bit rich. Moving forward, so keep 255 in mind. That is our what we're sort of targeting. This is the open to high, open to low range. And if you look, the very, very bottom there, the 100-day, you're looking at 0.436 or 0.430 versus 520. And you're asking the question, if this were to move, what would you get? On average, you're seeing 0.43% up or down after the open. As it turns out, 255, very rich. But here's the thing. Bust out your calculator. 0.0043 times 520. It's actually 2.32, something like that. So although 1 DTE, you actually kind of have a shot if there's an abnormally big move from the open to either the high or the low. This is going into Tuesday morning, the day before. But I'm looking for a better probability. I don't necessarily like the 1 DTEs as much as I like waking up in the morning, no concerns whatsoever, and mechanically putting on a single trade. This works out. Let's move forward. The high-low range, 0.828. Now, the thing is, sometimes the market opens at one price and just keeps on going. That happens. Not often. There's usually a low that is 0.43 below the open. That's something to keep in mind. But from time to time, you see big moves. The market knows that, though, and they're going to price options, stock options appropriately. So the 255 could actually go with a 1 DTE since, on average, the range is 0.828. But that's a high gamble. The next thing is the close to the low, and actually the close to the high and the close to the low. Now this number is interesting. The close to the high on the latest 100 days. Basically, you get an open, you get a low, you get a high, and you get a close on every single day. The close to the high is much smaller than the close to the low, meaning that the market tends to close higher than it does lower on average. That is important information. But what I want to know is what kind of trade can I mechanically put on every single morning? Tuesday morning, you wake up. As it turns out, reference is 521.65. We saw a $1 move overnight. The 521 calls, 520 puts, you're looking at $1.81. Now the question becomes, can you actually profit from that? Given the chart that we had in the very beginning, will we see a move of at least 181? And we go back to the charts, and actually, as it turns out, you broke even. Whereas yesterday, the movement was, you were able to see a price movement well beyond the average and bring in 25% off of, I think it was 172 yesterday. Today was 181, given the next day's concern about inflation data. The stock market believed that this was going to be a big game changer, so there could be some big movements. So it was the put call ratio was a little higher, pricey today versus yesterday. by about 11 cents, 12 cents. Nonetheless, today's price movement, as you can see, there was a pretty decent pop higher, and that trade broke even. You didn't make any profits, but you didn't lose any money either. You're still sitting on profits from yesterday, $50 for a SPY stock. Not bad. Start multiplying that, start doing that on a regular basis, things get interesting. Tomorrow, there's going to be some really interesting information simply because we get a big data point on Wednesday morning. That is something, if you're looking for options trading for beginners, Stock Options for Beginners is the series that I'm going to be putting together. And I'm going to continue to do this video, breaking things down with those 3 trades. I'm looking at 1 DTE, 0 DTE being the same, 1 week, 1 month to expiration. But I'm also going to bring in a few other stock option strategies and continually put them out there in the options trading for beginners, so that anybody who is interested in learning options trading for beginners can follow along and see what works. But the biggest thing is simply this: expectations management. A lot of guys put on trades and they think that's it. This is going to the moon. Actually, statistically, not really. And if you encompass that into your stock options trading can actually be very profitable. Moneyball. You're only looking for base hits. Base hit every single day. If you did that, you'd see a far higher success rate with your options trading. Regardless, make sure to hit that like and follow button. I have a whole series that I'm putting out for options trading for beginners. Make sure to follow along so you can keep up with this. I'm going to continue to bring in more strategies and look at them, breaking them down every single day, growing this series, options trading for beginners, so that those who are beginning in stock options trading can learn a lot about how to effectively be an options trader. Make sure to hit that like and follow button. See you in the next video.